back with another one. Feeling much better than I did yesterday. So you're probably going to find a lot more value in this one than the one before that. So let's get straight into it. Essentially, there were actually 3 trades that I did see today. 4 actually, but the first 2 I missed because I was practically asleep. No, I simply just was. So by the time I woke up, I pretty much missed the trade. But so let's just get straight into it and be completely transparent with you guys, right? So coming into the day, the first pair that I was really looking at was gold. Gold is clearly bullish on the daily time frame. So to me, I'm thinking, awesome. If I think that gold's bullish and it's going to expand higher, I'm thinking, okay, the 4-hour time frame should also be in line with that. Now, mind you, I'm aware of this 4-hour order block that's just been tested here and reacted off of. Yet, price continued to go up. So what does that tell me? Odds are we'll continue going up and we're going to invalidate this 4-hour order block, right? Now, as to the hourly, I'm thinking, okay, is hourly structure currently bullish, right? And sorry, let me just mark this. Yep. This is the 8 a.m. open candle, right? And what can I say about this? I can clearly say that the hourly structure is bullish and we never actually flipped bearish. Instead, we've actually swept liquidity on the hourly time frame, right? And now we are headed on higher. Now I understand that this one could actually argue that this was a liquidity sweep that was taking pretty much buy side to go down, right? But as you know, liquidity gets taken on both sides all the time. It's knowing what the main direction is that matters. So what am I thinking? Hourly still bullish. The 4 hours bullish. The daily is bullish. And now it's the 15-minute in line with my bias, right? So awesome. The 15-minute also gets perfectly in line with my bias. This happened at the exact same time as the 5-minute. Because the 5-minute was bearish, I was waiting for a 15-minute flip. This retraced back into this fair value gap, reacted positively on the 1 minute, saw a break of structure on the 1 minute, and from there, simple execution, right? This is a very simple trade that I could have took today, and I just missed it because I was simply asleep. Otherwise, this was pretty much what we like to call our golden setup. It happens all the time. All time frames aligning, hourly alignment, 15-minute alignment, 5-minute alignment, daily alignment, 1 hour, 4-hour, 1 hour, daily, 15, 5-minute, 1 minute. So everything is just saying market should drift higher, right? Second trade that we also missed, unfortunately, it's on GU actually. I did catch another trade, so we'll get straight into that. But the trade that we did miss was actually similar to this one. It was just everything aligning. I knew that the daily draw was likely at least within here and could likely visit all the way down here. And I'm just thinking to myself, daily time frame is bearish, right? Now, the 4-hour time frame is also bearish. As you can see, we actually have a high time frame liquidity sweep right here, right? And then off of this liquidity sweep, we get hourly breaks of structure to the downside, which we're going to look at now. So I want you to think about, okay, daily side is bearish. 4-hour is just going down, retracing, going down, retracing. Now we swept liquidity on the 4-hour. And the hourly is about to flip bearish, but I don't know that it's going to flip bearish or not, right? So where time-based trading comes in, when we say, okay, session open, it's most likely for us to be making the day's move, right? So what does that mean for us? That means that we need to see signs of the potential hourly break in advance, right? So what does that look like? That looks like the 15-minute breaking structure and ideally validating some form of bearish structure so that we can assume that price will head lower, right? What happens here? We simply get a 15-minute break of structure, right? After this 15-minute change, what happens? We get a visit of the breaker / fair value gap also that was made from that break of structure, right? I would probably look for executions within here. And from here, I pretty much just would have waited for the first break of structure and nothing more complicated than that. Because within this retracement phase, right, what can we tell? We can tell that price did not break structure to the downside even once until it got back into this area, at which point it broke structure for the first time right here. So most likely entry would have actually been either right here or on the retrace off of here, right here. So I would have most likely found an entry either here or here. That was the second trade that we missed, right? Now let's talk about the third trade that we actually caught. And it's actually a little bit funny because essentially I used the same concept, same everything to execute at that said higher point, right? So this is where I woke up, like around here. So I was like, oh crap, I missed the entry. I need to find new entry confluences. So the 1 hour, like we established previously, was actually not bearish when the first trade was being analyzed, right? The one we just did. But in this case, it was. So I'm thinking we have an hourly order block right here, right? This looks like an hourly order block that should get visited, but with the knowledge that normally after that 9 a.m. close, we get a retracement for the candle, and after that, most likely we get an expansionary move. So what does that mean for us? That means that we could likely expect a retrace, but we also want to see if we're trading with an OTE and if we are retracing enough to continue on with the move, right? And for us, what happened was actually we were with an OTE. How did I measure that? I'm looking at every single leg that gets made. OTE gets taken here. What happens here? Equilibrium again, right? This is actually a little bit lower if you go to the down to the 1 minute, but for example's sake, we get into 1 minute OTE. We also sweep 5 minute liquidity here, right? At which point I'm thinking first break of structure to the downside, I'll take it. With this being right around that 9:30 mark, odds are if we sweep liquidity, we'll likely just make a move a little bit higher and then come down, or we'll just make an impulse straight down. So that's pretty much what I was looking for from this trade. I'm still sort of in it. I'm waiting for my final take profit to get hit here. But this gave us a decent 2R in the bank. So now let's look at the final trade that I took. So this is the trade that I did take, and the trade that we just analyzed is one that I also took. Now let's look at this trade, which was on GJ, which was probably the easiest one of the day for me, because after the gold one, actually the gold was the easiest one. This was daily time frame, clearly bearish. We are headed a lot lower. Honestly, I don't know why I didn't target lower. It's probably because I was low-key in a rush. But the 4-hour time frame, also bearish, right? What happened here? We have a 4-hour flip, right? After the 4-hour flip, what else do we see? We visit the 4-hour order block that was made off of that break of structure, right? We make a break of structure, we revisit the order block, and then what happens? We want to see capitulation of price. We not only do that, but we also see price reverse back into OT, right? So you get a reversement, you get a reversal into OTE, you get a retracement into the order block. You have the daily time frame on your side, the 4-hour on your side, the 1 hour on your side, and the 15 minutes also on your side, and it's just retracing. So at this point, really, you don't even need a 5-minute break of structure. All you need is a 1-minute break of structure. Because really, the 5-minute will break if you have a 1-minute break of structure that's being validated by any form of other structure. Because as you know, 5-minute structure is just 15 1-minute candles. Because 5 minutes, 3 is what you need for a break of structure, right? This is actually so much sauce now that I think about it. 5 minute to break needs 15 total candles on the 1 minute. If you can see that you have a good 10 candles that have formed and you have structure validating on the bearish side, odds are it's going to break. So you can get in early enough to have your stops still very tight. What do I notice here? Right after market open, price comes in, takes that high. After that, breaks down. Awesome, good to go. What do I also notice? I notice that we see this bullish order block that we react off of. Now, we react a little bit off of it, only to go ahead and break 5 minute structure to the downside and head on even lower. This was a very simple trade. 5-minute structure was bullish, 1 minute was bearish. So odds are that 5-minute would break because the 15-minute was bearish and that 5-minute leg was just a retrace. Make sense? That's pretty much the trade recap for you guys. You guys can join the Discord. It's completely free. All of it gets sent out in advance for free. Free calls, free mentorships on the weekends. And yeah, we'll talk soon. I'll see you guys in the next one. Make sure to subscribe. And yeah, that's that.